JBlog, 30th of August 2009. So as we start out with the S&P 500 stock index, looking at the chart for the last 3 months. Last week was basically nothing. Nothing much happened here. It was basically a flat week. We're getting close to September. September being statistically one of the worst month of the year. And after such a long run-up, there's a possibility of the market taking a breather here or actually continuing its downslide. Could happen. I keep waiting for it. It's not happening yet. There's just too much liquidity going into the market. But it's hard to tell whether it will happen this week, next week. The market is unlikely to continue going up at the speed that it has. That's my projection. That's my trading basis, and eventually we'll have to correct. But yeah, I've been saying that for quite a while. Actually, I've been saying that since somewhere around here, and was expecting the market to fall through this shoulder. But instead, it went up. Obviously, I was wrong so far on this, but that doesn't stop me from continuing to think that it will happen. Actually, the fact that I'm starting to run out of patience with the market tells me that perhaps it's a good time to stay in anyways on the short side as well as long side. As I keep saying, I am well hedged and I can make money on either upside or the downside of the market. The Dow Jones Industrial Average has had pretty well the same uh, week as the S&P 500. The Nasdaq itself on Friday started a little bit higher and then dropped from there. It's basically the same chart. All of the markets have the same charts. A lot of investments seem to be taking place on a broad basis, ETFs, and that sort of applies the same trading pattern to all of the markets out there. It's not particularly exciting. That's just the world that we live in these days. Going over, there is. I like to use stock charts for their charts. I like the presentation of stock charts and the fact that I can have a lot of technical indicators all on one page, very nicely presented. So anyways, continuing to have this technical non-confirmation where we're looking at the New York Stock Exchange Composite, and we've got higher highs over here, but we do not have that reflected in the RSI. That's a technical non-confirmation. Volume is pretty well flat. It hasn't moved. So volume is good, so I can't really say that the support higher hasn't been on good volume. Stochastically, again, it's a non-confirmation. Stochastically, the move in July was definitely a lot stronger than the move in August. We have not reached new highs. Money flow is decreasing. OBV is still looking very strong. The same thing goes for the S&P 500. Same, the VIX seems to be leveling out now. It has actually made a new higher high, which could mean that a little bit of worry is starting to re-enter the market. Not sure yet whether that will be a real higher high or whether it just be falling down and forming a lower low after this. From a lot of this movement has been driven by news, and news has been very positive for the most part. I think the interpretation of the news has been a lot more positive than the actual news was, and a lot of it is based on jobs, and a lot of it is based on the so-called recovery in the real estate market, which I personally do not see quite yet. Um, Going to one of the charts, the year-over-year change in home sales, everybody's pointing out this recent increase, which is that house sales used to be declining at 45% and now they're declining only at 13%. That's supposed to be good news. There's a couple of things that are happening here when you actually read into the details of the reports. One of the things that is happening is that uh, at this point down here, only uh, smaller houses were selling, like we're talking the cheaper houses, $200,000 or below, were moving, and the more expensive houses, half a million, $1 million houses, weren't moving at all. So all the movement was at the bottom of the scale. Now what is happening is that the bottom of that scale has pretty well stabilized itself. Most of the foreclosures are done, and now some of the higher priced properties are once again moving. So the market says, oh, see, home prices are going up. They're not going up, just that average home price that is being sold is going up because people are once again buying higher priced houses. But in reality, home prices are still going down. We're going to see foreclosures increasing still from here because we're starting to have prime mortgages failing due to unemployment. Alt A's are continuing to be foreclosed. Most of the subprime has been washed out of the market now, but Alt A and prime mortgages are starting to fall apart now, as well as there is something called option arm that will actually be the next piece in the real estate to fall. And then finally, commercial real estate being because of business slowdown, commercial real estate is now in danger of being the next one to fail. And where some of the deals that were signed and some of the construction loans that were signed were based on a cap rate of five and even less than that. Now, with the collapse of commercial real estate and re-signing of leases, that's going to be lower due to oversupply and under demand. Those cap rates are going to be even further underwater, and there isn't really that much space in a commercial real estate loan, so that's going to be a problem. And the other thing that is wrong about the statistic is that yes, house sales have gone up. The question again is at what price? Fact is, some of these properties have been selling, but they've been selling on 20 cents on the dollar, 30 cents on the dollar, 50 cents on the dollar. Yes, at some point or other, people will buy properties and they'll try to rent them out. That doesn't mean that the real estate is bottoming out. It simply means that at some point people will buy things, but we haven't seen the worst yet in real estate. So I continue accumulating SRS, which is the inverse real estate ETF, and I continue adding in small pieces carefully to the inverse banking ETFs. There is going to be more bad news in banking once reality once again takes over. In the meantime, I have longs in agriculture, in some steel, in some base metals, uranium, gold, silver, oil. So on either side, if I'm wrong on the short side, then I can still make money in this, but I'm still expecting September, October to be looking uglier than it is now. And going forward, it will take a little while longer for this whole thing to wash through. So anyways, that's my commentary for today. Hope you make lots of money and good luck.